Good morning, folks. It's Tuesday morning, and we are here with you. I am here for Money Truth Moments with our very own Money Truth expert, Whisper, and just all around guru when it comes to money truth. Judy Kobenbarger, how are you?
I'm fantastic. What a great day. How are you, Carlo?
I'm doing fantastic. Folks, if you're just joining us, welcome. Make sure you're following Judy at judykopenbarger.today. We have a fantastic show, so you better grab your pen, paper, pencil, crayon, whatever it is that you need to, but you need to write this down and share it out for sure. Today, we're talking about why calm investors usually win. And investing often feels emotional, especially during like uncertain times, right? So in this episode, folks, we're going to explore why calm decision making matters more than perfect timing and how emotional reactions can quietly undermine your long-term investment goals. So what do you say we get started, Judy?
That's a mouthful and it's so important. So important. Absolutely. Why we invest, the emotional stuff behind it, and the impact of, acting on emotions or not. So I love this topic. Let's go.
All right. So let's start off by asking you, why do people believe they need to react quickly in the market, that rush, right? When something happens?
Oh boy, lots of reasons, but I think, it's an emotional market. If you look at what happens, the news impacts it. One person, I remember one time, uh, it was Oprah years and years ago said something about beef isn't good for you. You eat too much or something. And the whole market just like went the other way. It was crazy, crazy. So one little thing can impact, a little bit of news, a little bit of concern, military action, something that's going on with interest rates. We do react like that. It's an emotional market. That's kind of the macro view. The micro view is when people are thinking about investing, everything's on the line. I think people view their investments as that's my future. It's my family, it's my legacy. It's going to decide what kind of choices in life and opportunities I have or don't have for me and for my family. It's about the impact that I can have. All of those things weigh on if this investment works or not, right? It's a lot.
Yeah,
It's a lot.
no, you're absolutely right. And I think that actually leads me to my next question in talking about really just life experiences, right? So when this happens, why do you see happen when people let that fear, that excitement guide their emotions? Which at least for me, I don't think that that should be the driven factor. But let me ask you the same question: Why does it happen? Why do people do it?
Well, all of the marketing, there's kind of a flaw in the marketing design around financial products, financial services, things like that. It's either fear or greed. And you kind of see that in the whole commercial market. Buy this deodorant or this tooth whitener or whatever, and you'll be popular. If you don't, oh, right? So it's like fear or greed. I want more and I want to make sure I don't lose out. And so that's the marketing behind, particularly here, the financial services. And so if people are coming from the fear angle, it's like they don't want to lose out. There might be some FOMO there, fear of missing out, right? They don't want to miss the ground floor opportunity. They wish they would have bought Bitcoin when it was 30 cents. Now it's thousands of dollars, right? So, we keep hearing that. You should have bought gold when it was 300. Now it's 10 times that. So, more than that, actually. So, people don't want to have that loss. They fear losing out. They fear they won't have enough or what they have won't last them long enough. They fear they might end up having to reboot. And if you make any decision on fear, you're going to be prone to mistakes. You never want to make any decision. It doesn't matter what part of life it is. You don't do it
Right.
out of fear. You do it out of systematic, optimistic steps, step by step planning that helps you get the outcome you want. And it doesn't matter if it's your relationships, your health, your money, it doesn't matter what area of life it is, education, it doesn't matter. Even sports, you see athletes do that. They don't say, I fear I won't be the best at my craft. I fear I won't be the best in my sport. They say, here's the outcome that I want. And here's step
Right.
by step what I have to do to train and get my coaching and put in the time and get in my reps to achieve the outcome that I'm looking for. Financially, same thing. Step by step, what do I need to do? Not from fear, but from planning.
And wouldn't you say that that's also, I mean, we talked about this in previous shows. It's also has to do a shift in your mindset, right? It really comes down to your mindset and period, I would think, right?
It's all mindset. I would say If you think you can do it, you'll be right. If you think you can't do it, you'll be right. So it's that steady plodding. When you look at a way to just calm and realistically move forward, it's that steady plodding. Set out a plan, create, I like to call financial roadmap, right? So set out your roadmap. What are the outcomes we want? What's the why behind why we do what we do? The outcome that we want, and then what do we have to do? Reverse engineer it. What do we have to do between now and the time to achieve our goals to be successful at that? Steady plodding. And that's biblical too, by the way. It's in Psalm. So steady plodding, not get rich quick, but just put in the work, let time be your friend, dollar cost averaging, investing over time, being disciplined in your expenses, all of that. It's not sexy, it's not trendy, it's not that fun, and it's not exciting all the time, but it works. And these principles, they worked 2000 years ago, they'll work 2000 years from now. They just work. So it's very simple, not always easy because there's discipline involved and habits involved, but very, very simple.
Folks, if you're just joining us, welcome. Make sure you're following Judy at judykopenbarger.today. You're going to see a QR code there on the top left, so make sure you scan it with your phone. Make sure you also follow her for a lot of great content on her website that we'll talk a little bit more about later. Today, we are focusing on why calm investors usually win. So, for a lot of folks who are living that fear of investment because they don't know any better, a lot of the folks that have the money in their mattresses or under their mattresses, pillows, whatever you can think of other than
Sock
investing.
drawer.
Right, exactly. So, how would you explain long-term investing in a calm, realistic way?
I would say just plot the course. Let's say if you're thinking about retirement, I don't really like that word, but if you're thinking about what's going to sustain your future financially for your family as long as you're here and legacy and all of that, what do we need? And what do we need to do between now and then to get what we need together? Maybe you have a pension, maybe you have Social Security you're expecting, maybe you have other rental income or passive income coming in. And what do I need to do to supplement that, if anything? So, what's my plan for that? How sustainable is it? What do I expect to earn between now and the end, whatever the end is? At our office, we plan until age 100. But whatever you think that is, work with your advisor to get that plan in. What are we going to need and how are we going to get there? And then chart the course, do those things. Maybe you need to supplement with other income. Maybe you need to think about other streams of income. I always say 7. I hold my fingers up like this all the time when I'm speaking. Anyone who's heard me would, they'll say, oh, there's our 7. 7 streams of income is always the optimal goal. If you have 7 streams of income in your mid or later life, you'll never have to worry about sustainability and supporting, whatever your expenses are. So that's the goal, and so you think, well, creatively, what could I do besides my job? Maybe that's one stream. Maybe I can have an ADU out back and get a tenant in there and get some rental income. Maybe I can invest some money, in a solid investment on the side, a well-balanced investment. Maybe there's a small business that I could do. I have a hobby or a craft that I could turn into, monetize it and turn into a nice business. So there are always ways. Getting money is easy. Managing money takes a little more skill and sometimes a team in place. But getting money is in this country, are you kidding me? I could give you a case of water bottles and send you out on the corner and you could be in business. You could make money, right? I mean, anything can happen here. And if you have any skills at all, if you have any motivation at all, even not even a lot of skill sets or know-how, you can make money. You see people do it that come from other countries all the time. Wide open, wide open. So getting money, no problem. Managing it, that takes a little doing, which is why we're talking about the investments. But 7 streams of income is the goal. And if that helps anybody who's listening to this, just think about their future cash flows in a different way. That's why we're here. That's why we're here. It just sometimes takes a little ignition to think about something in a new way and go, well, what else could I do? I never thought of that because I just went to school to get my job. I got my job and I do it 40 years and retire, right? So there's more, there's a lot more for people who are open-minded. And investments is just one part of it.
And to your point, anybody can make money. It's you think about it, this is going to sound funny, but you think about the kids in the corner they're selling lemonade for 25 cents, or with
Mhm.
inflation now, I think some of these cups are now up to 75 cents. So it's not a quarter anymore, but they're still out there, getting that exposure to business and how to be business savvy. And to your other point about managing, I think this is also the downfall of a lot of people that come into money very quickly that don't know how to handle it. I mean, you take the example of people who win the lottery, millionaires, and all of a sudden, less than 5 years later, they're broke,
Poof,
even in worse
poof.
shape than they are. And I look at some of the trends. I look at some of these shows where they follow them, and they for whatever reason listen to people that, hey, spend $15 million on this mansion. That they don't think about maintenance, they don't think about the taxes
Mhm.
behind it. You know what I mean? Like the simple things that you should be paying attention, and that falls into the management of money, that I think makes it very difficult for people to just succeed, in certain situations.
Yeah, and there's a lot of bad influence and bad information out there too. So you just got to navigate that. But I think the basics, if you just are always considering the offense and the defense of your game, your financial game, you want to grow it, but also protect it. And there's lots of ways to do that. So it's just having a little know-how or someone around you that does to make that happen.
So let's move on to now. You have we're going to talk a little bit about the shift in thinking, but you have these newbies who are investors, right? Who for lack of knowledge and experience don't really know what they're doing, and they seek out help. However, right, what could you tell some of these investors who focus on the daily market movement, right? And if it goes up a little bit, they're like, oh yeah, happy. If it goes just down a little bit, they freak out like the world's falling. What would you say to these folks?
Well, those are the people I see when I go to places like Monaco or Vegas, right? They're really happy when it's up. They're really unhappy when it's down. What a way to live. It's just gambling, right? So if you're day trading, and I'm not going to say that's not a way to go, it's not my way. I'm more of a steady, plodding, conservative investor. Has just worked my 40 some years in practice. Got very, very happy, sustainable, wealthy clients that did the things over time and they mitigated risk. So, reducing risk happens when you're not gambling. The day trading has a lot of ifs and whats and I can't imagine the stress of dealing with that. But people that go to Vegas and they're gambling, they're stressed, but they kind of like that, right? They kind of, it's kind of like the people that have the need for speed. So that's just not me. That's just it hasn't worked in my world. It hasn't worked with my clients and things like that. So that day trading is it's just gambling. You hope it's going to go up, you hope it's going to go down, and then you're timing all of that. So, when it comes to investing, this is probably a great concept to throw out right now. There's tactical planning and there's strategic planning. Tactical planning is when you're timing the market up, down, buy, leverage, options, all of that. You're kind of betting this way. You're leveraging one way or another in your investment, which can be beneficial, but it comes with risk, right? The more reward, the more risk, all of that. So I always err on the side of less risk. Why would you take on more? So you do things like dollar cost averaging, you do things like diversifying, balancing, making sure you're reducing risk at all times. That's that defensive part, the protective part of investing. And then there's strategic planning, which is, you could oversimplify it and say buy and hold, but it's like create a portfolio that works, put together something that will weather the storm, that is cost effective. You're not spending a lot of money for something that's not managed actively, and just let it go. Let time be your friend and let the markets do their thing, let the interest do its thing, and leave it alone. And then just steadily add to that, let the market add to it, let you add to it. And pretty soon, Mr. Money does more work than you do. And then it becomes sustainable. And then it goes from you putting in all the money to the money putting in all the money. And that's when you go and do what you want to do in life. Sometimes later in years, sometimes not so late. Depends on when you start. But it's all possible. It's all probable when you do the simple, not always easy, but the simple things.
And I know we're getting closer and closer to the end of the show, but I'm gonna ask you, and we've talked a little bit about this, and I'm gonna go back to talking about just a reflective moment. So, what emotion, in your opinion, causes the most damage to investment decisions?
Fear, FOMO. Yeah. Fear. It's not going to be enough. It's not going to last long enough. The marketing's coming at me. I see all these gold and silver commercials right now. It's like, if it's so good, why are these companies selling so much? They're saying, you need to have it. You need to have it. Well, why are you divesting? Why wouldn't you just be quiet, keep your mouth shut, and keep the gold, right? So you just got to
Oh,
kind of
yeah.
always look at those things with, what's the real motivation? Is this a marketing thing? Do I really need to get more information? Usually, yeah. But fear is the emotion that causes most mistakes, I think, for people when it comes to finances.
All right, folks, we are at the tail end of our show. You know what that means. It is Money Truth Challenge time. So, what do you got for us for this week?
Yeah, let's suppose you're sitting on some money. You got 20,000, 50,000, couple 100,000, whatever. Maybe you just sold a house or a business or came into some money, inherited something, and you're about to make a big investment decision. Maybe you're rolling over your 401k. You just retired, and now you're getting ready to place the money to turn it into your streams of income. So let's say you're just right at the edge of these decisions. There's a fork in the road, and you have all these options. You're talking to all these people, going on Googling, what should I do with my money, with my cash? I say, as a challenge, take a breath, get out your pen and paper, and write down the emotions you have when you're thinking about the options on the table. How do I feel about Bitcoin? How do I feel about stocks and bonds? How do I feel about my 401k mutual fund portfolio? How do I feel about the market? Do I feel optimistic about what's happening with all the changes and tax laws and things they're talking about, in Washington? Or do I feel kind of pessimistic about the future and my future? And I think just making a few mental notes of the emotions that you're feeling can help kind of purge that. So when you go to make a decision about what you're going to do and the planning that you're going to put in place, it's not coming from the emotions that maybe you haven't uncovered and purged. So it's kind of like, come clean and then calmly and optimally and intentionally make the choices that you need to make around your investment decisions. That's the best advice I can get. Take a breath, take your time, and get it right the first time, because you might not have time for a second time. That's your challenge.
All right, folks, you heard the challenge. And if you're just joining us, please watch the beginning of the show. Today's show is basically why calm investors usually win. There's a lot of great content that we have discussed. For next week, we'll begin March by looking at spending habits that actually just drain our cash, right? That we overlook sometimes too. So with that said, make sure you are following Judy at judykopenbarger.today. A lot of great resources. You come back. You can also view a lot of the old episodes as well too. There's a lot of great content. Judy, any last parting words?
Make it a great week. You can do this.